Hi everybody, we are in tools and delete a form because I want to look for the installment sales form to see if I need to delete it, so we could look at the scenario that we have only the capital gain tax that we need to pay. So I'm just gonna say delete it, and you can see our number jumped down to 2,208 just by deleting that installment sale form. So I'm gonna go back to tax home, and you can see that our bar, the number estimated, and all the tools on the left are gone. So a lot of time to troubleshoot it, we have to go through different section, and maybe earlier I was doing finish and file, and then that brought up this. So I'm going back to sale of home. Okay, here's the issue. It should be 800K. Time you live should be 24. And then no, another home sales. So you could see our federal tax due has jumped up. So you can see here that is telling you that we have that $240,000 gain, and see our federal due jumped up from just the $2,000 something additional tax due. Our tax liability was about $8,000, and then our withholding from our W-2 job was about $6,000. So there was like $2,000 additional tax due, and then now it jumped up to $38,000. So if you did not use installment sale that first year that you sold it, in our scenario, you would have to pay extra about $36,000 more in taxes. That's for the federal side only, and from the Hawaii side, you have state. If you're in Hawaii or another state that have income tax, that number jumps significantly as well. So remember, this is the question that triggered the installment sale. Payments after 2023. Will the buyer of the home owe you all or part of the purchase price after December 21, 2023? So if you want to trigger installment sale, this is the question that you want to say yes. And if you don't want to, if you don't use installment sale, you would say no for the question. But you know here, your total income is the $240,000 on the capital gains for the sale. And then, you know, your W-2 income in our scenario is 80K, and then we have like a Schedule C. And this is you, in our example, we use merit filing jointly, so we already be able to exclude it 500K from this gain already. So you could see that you save significantly just on the federal side in this scenario, about $36,000. Well, $36,000 was the jump from not having any sale at all to having to pay capital gain tax on the 240 plus the state. Yeah, the state jumped as well. So I'm just gonna say yes, that we use installment sale. And this is, do you want to use installment sales method to report a taxable gain of $240,000? This means that you will report and pay taxes on the gain each year as you receive principal payment instead of paying all the taxes now. So we're gonna say yes. Any amount of debt is gonna be 0, and then payment received was, for our example, was 100K. Interest received was $7,000. So you see the federal due went down to 4,200. So it went from this is the additional due, yeah. So it went from $38K additional due to about $4K. So that would be about like 33, 34K of differences on the federal side. Yeah, and then you see if you have state, even for Hawaii, the additional due was 21K and it jumped out to 6K. So you save significantly this year, right? And then it probably keep your tax bracket low enough. So you can see now we're back to our capital gains. It's only 30K instead of the 240K. Right? And then now we also have to pay the 7K of interest income, which was zero in our previous example, but we saved significantly in taxes. Yeah. So hopefully that was eye-opening or interesting to see. And let's move on to the next video.